All right, hello everybody. I am currently looking at PayPal, and today the market has gone down. You can see SPX or the S&P 500 is down 1%. Yesterday it was down about 1%, and so definitely looking at a couple of days of down market. Federal Reserve came out and said they're holding interest rates steady and possible increases towards the end of the year. Another interest rate hike. It appears that the overall market as a whole, you can see there's a lot of red. Apple, Nvidia, Amazon, Google, Tesla. I mean, there's just so many stocks that are in the downward trend the last couple of days based on that information. Does that mean that all those companies are struggling? Maybe, maybe not. But at this point, it looks like a lot of the trend is based on that announcement by the Federal Reserve. So my take is going to be that, we're probably, if I was to look at the market, I would assume that it's not going to continue that trend. At some point, historically, what I've seen is good news comes out and people get hopeful and they start to invest and put their money back in. So, when I'm looking at, let's say, PayPal, for example, I can see that it's trending down with the market as a whole. If I look at let's say the 5 year on PayPal, I can see that um, historically it, at these levels that it's at now, it hasn't been since 2017, 2018. It's hit as high as 275. It's come down since let's say July, August of 2021. The last month looks like there was a point here at 57 roughly that it tested a point there, bounced back, went above a point of about a 60. We can see here about 60. It hit a tested 60 there, tested 60 there, and then just recently now just broke through at this point here. So my assumption is that 57 would be another bottom that it would test. Now, will it break through that 57? Possibly. Nobody knows the future, but that would be my bottom, the next bottom that it would, or support that it would have to break through. Considering that it's been about a month and it hasn't been at these levels in so long. Another thing I'm going to consider, keep in mind the 57. You can see I also put a resistance up at about the 65 mark here. That it actually tested the ceiling here, tested the ceiling here, and created a resistance of 65. So that would be my operating level, would be between a 57 and a 65. If I look at the fundamentals, excuse me, in terms of analyst research, they're putting a price target of about at 87, 85. And you can see most of them are saying buy, it's undervalued. Even the lowest that has a hold is at a 75, which is much higher than the current 58. Looking at it in terms of the news, it looks like stablecoin is now available on Venmo. So there's some positive things that are coming out for PayPal. Does it mean that the stock's going to go up? No, but the more information we have, we can look at that. So here on Robinhood, what we're looking at today, what I'm looking at is looking at PayPal. I can see a lot of the stocks that I'm monitoring are down. Intel's one I currently have a put in. You can see it's down with the market. USB's down with the market. This Intel's expiring tomorrow, so we'll see what that does. If it stays at levels below my strike price of 37, then I'll buy the stock and enter into selling covered calls or writing covered calls to generate income that way, holding on to Intel at about the prices that they're at now. I feel pretty comfortable doing that. So let's look at PayPal. If I click on PayPal here, so now we got PayPal's about a 57, like we were saying. So trading options, I said 57 would be the bottom. So if I look at selling a put, let's say with for next Friday expiration, which I'm currently, like I said, a 57 strike, I think is what we talked about. 57 would be the next bottom. So you can see here that PayPal, it was currently on the 23rd undervalued company, according to the undervalued stocks finance chart. So again, a lot of indications showing that, hey, PayPal's undervalued. Have investors put a lot of confidence into it? Well, I think that momentum is possibly can build. So, if I look at selling a cash secured put, let's take out Carvana. That's the one we looked at last time. It did not enter into that trade, but we did it as an example to look into it. So if I look at PayPal, all right, and earnings date. When is the next earnings date? So if I come here to PayPal and I look at the snapshot, so it looks like the next earnings date is 11/2. So there's no dividend. So we'll put oh my God, stock symbol. Let's go back here. Let's correct that to PayPal. Dividends date. Next earnings date 11/2. This is not applicable. So it looks like we're within the next earnings. The share price currently 58.93. All right, strike price, I said, well, let's look at that again. This is 57, I said, is my bottom. So then the question is going to be how conservative or how aggressive. So if I look at a strike price, 0.24, I mean, that's within the 0.3. And am I willing to buy it at 57? Again, taking a look. How comfortable do I feel at the 57? Will it bounce out or will it cross through? I think for me, I'm willing to go at the 57 for 1 week. Let's see if it can hold. But I'm willing to buy the shares at the 57. I'm willing to buy the shares now at a 58, 59 because, wow, 3% drop. If the market turns back, I would assume that it's going to go higher. So without learning how to sell puts, cash secured puts, I would buy this at the 59 level. But why not buy it at 57? And if I don't get to buy it at 57, then I will generate income. We will see. So 42 cents per. Okay, so $57. So let's put this information here. So the strike price 57. I know the limit price is 0.42. We just said that. I know the delta is a 0.24. We just looked at that. Is it a red day? Yes, it is definitely a red day. Let's look at the volatility. Looks like volatility is about a 35%, which is, wow, that's pretty good. That's within my range. My estimated bottom is a 57, but even if I were to go here and say, wow, what is the next bottom? What is that? Gosh, it hasn't hit another bottom for a long time. So 35%. So coming here, 35%. Expiration date would be next Friday. That'd be the 29th. We can confirm that. It looks like it's the 29th. Yep, got that. So let's go back to this. The 29th is the expiration date. So it looks like about 7-8 days. One contract. It looks like my risk is, not a lot of risk on this one to me. I think it's a lot of positive indication, fundamentals, technical. If I were to put a 56 there, what is my risk? Not strike price. What is my risk? If I was to put a 56 in the dollar per share, my risk is $58. It's not a big risk. And, if I did have to buy it at 57, it went down to 56, then I start selling covered calls and start generating income as the stock is finding its bottom and on its way back up. So I'd be able to generate income on the way, as it finds its bottom and comes back up. So at this point, what I'm going to do is I'm going to take a look at that. Okay, at 57, if I were to click this here, you can see the total credit is 43. So 43 is the income that I'm going to get, the premium that the buyer of the option is going to pay me. Looks like a 44. So I'm going to review the order. The collateral is $5,700, which is 5,000, which is $57 times 100 shares, and I'm going to submit. And you can see that's done, pending field. So at this point, I have purchased or actually sold the cash secured put. My collateral is $5,700. I've collected a total credit of $44. So if I go here, I can put the 0.44, and you can see that my ROI is a 0.77%, which is not a huge percent, but over an 8-day period, if I were to do that trade once a week on this stock or other stocks, you can see that it averages out to about a 37% annual percentage yield, which is not bad, assuming that the trade goes my way or positive in the way I see it. And you can see here what I'll do is I'll put, I opened the trade, the date was today, 9/21, with PayPal. It's a cash secured put. The ticker value that I opened the trade, let's call it a 58.9. Strike price, which I got a 5.57 or 57. It's a strike price. You can confirm that because I have my data here, strike price. Expiration date is next week, the 29th. So we're looking about 8 days. Actual length, I have the formula there if you wanted to look at that. Okay, it's only been half a day, but really it starts now, but it started the calendar as of 12 a.m. One contract price was a 0.44, which is what they paid me, premium, $44. If I was to buy this at $8, I would receive a net premium of $35. So if I got to that point of 80% of my premium, I would consider buying this back before the expiration date, collect the profits, move on to the next trade. So I hope that was helpful. Hope you learned something. Leave a comment, subscribe, like, hit the bell, and let's continue to do this and see where we end up. Thank you for your time. I appreciate it.